Consumer confidence weakened in the third quarter. The FNB BER sentiment indicator dropped to -13 from -10. The decline was led by middle-income households, which earn between 5 and 20,000 rand a month. According to the index, this group is under increasing pressure due to rising food inflation, weak job creation and dwindling two-pot funds. In contrast, low-income confidence improved due to above-inflation social grant increases, while high-income households held steady. Prices at the factory gate have picked up. Producer price inflation rose for a third straight month in August and hit a one-year high of 2.1% from 1.5% previously. The main upward pressure came from food, beverages and tobacco, which alone contributed 1.3 percentage points to the headline figure. Private equity investment company EPE Capital Partners, better known as Ethos Capital, has reported double-digit growth in both its net asset value per share and share price in the year to end June. Adjusted NAV per share rose 30% to R8.57, while the share price leaped 58% to R6.65. This cuts the discount to NAV from 40% to 22%. This performance was supported by the company's unlisted portfolio, which delivered a 31% return. Nepi Rockcastle says there was exceptional demand for its €500 million green bond. It attracted an order book exceeding €4 billion from more than 200 investors. Commenting on the outcome, CFO Eliza Predio stated that the demand underscored strong confidence in the group's credit profile and sustainable growth trajectory. An application has been made for listing the bond with Euronext Dublin. Barloworld has reported weaker trading in the 11 months to end August. During the period, revenue fell 10% to just under 34 billion rand, while earnings before interest, tax depreciation and amortization slipped 9% to 3.8 billion rand. That's as the company's Southern African equipment unit saw softer after-sales income, though rental growth and machine sales offered some support. In Mongolia, revenue declined after a major order last year, but margins improved. While revenue at VT more than halved, the business stayed above break-even with stronger profit margins. And the group's consumer unit in grain held steady despite rising costs and import competition. Barloworld says its balance sheet remains sound with adequate funding headroom, and its full-year results are expected in mid-November. Tsogo has been given the go-ahead to relocate the Caledon Casino license to Somerset West. The approval from the Western Cape Gambling and Racing Board paves the way for major investment in new gaming and hospitality facilities. The group says the move is a win for both the Helderberg and Overberg regions, as it will boost the local economy and create jobs. Choppies has moved to clarify confusion caused by media reports suggesting it sold a portfolio of retail stores in South Africa. In recent days, several outlets carried stories linking Choppies to a transaction between Choppies Supermarkets SA and the Shingai Itai Consortium. But the Botswana-based retailer has labeled the reports as misleading and factually incorrect, stressing that it has no involvement in the alleged deal. Choppies exited the SA market back in 2019 and has not entered into any disposal of stores since. The firm has a primary listing on the Botswana Stock Exchange and a secondary listing on the JSE. MC Mining has appointed Christine Hare as CEO of the group. She will take up the position from the 1st of October. That's as she's been serving in an interim capacity since July last year. The company credits her with driving a strategic shift towards sustainable, cash-generative coal production and for laying the groundwork to bring the firm's flagship Makado project into production early next year. Further afield, China's BYD sold 3 times as many new cars in the European Union last month than in August 2024, surpassing US competitor Tesla as the bloc saw a rise of hybrid and EV sales from a year earlier. Here's more detail in this package report.
Chinese EV maker BYD outsold Tesla in the EU for the second month in a row. Data showed BYD sold 3 times as many cars to the bloc in August than in the same month last year. Stellantis also had buoyant results, returning to sales growth in Europe for the first time in over a year. That's as the overall market expanded, with a boost from plug-in hybrid and battery electric sales. Europe's battered car industry faces a number of challenges. This includes US import tariffs and competition from China, as well as difficulties in meeting domestic regulations for EV adoption in a way that yields profit. Car makers have ramped up PHEV sales to comply with emission standards, with more affordable and more profitable cars than pure EVs. Chinese brands have also used the technology to minimise the impact of EU tariffs on Chinese-made EVs, as well as to win over China-sceptic European drivers. And with BYD's sales up over 200% in August, it took 1.3% of the market, whereas EU sales for Elon Musk's Tesla dropped 36.6%, squeezing its market share to 1.2% from 2% a year ago. And as total EU car sales rose last month, the registration of hybrid and electric vehicles rose to over 62% in the bloc.